We are getting some commentary out right now. Speaking to the Financial Times, the Fed's Loretta Mester saying that the new variant could exacerbate the supply chain crunch and worker shortages, therefore impacting inflation. And she says that she'd support at least one rate increase next year and that two might be appropriate. So as an investor, how do you navigate this? That on the one hand, we may have the economy hit as a result of the new variant, but is going to add to the other pressures, which could potentially see a normalization of policy happen faster than we initially thought.
You're absolutely right. And that actually ties in with one of our core themes for 2022, in which we expect greater financial market volatility in general, as the kind of investment and macroeconomic and policy-making landscape becomes much more difficult. So, for example, in 2021, we've had pretty well-behaved markets in terms of sell-offs compared to 2018 and 2019. We haven't had that much volatility. But 2022 is going to see much more difficult kind of policy-making choices and greater cross-current surface. So, for example, liquidity is going to be withdrawn. The Fed's going to start hiking. We have midterm elections in the U.S. We have large major elections in certain emerging markets. Earnings growth is going to slow. We're going to be facing later kind of cycle pressures from an economic perspective. And at the same time, we see a greater possibility for dollar strength. And all of this is going to start or continue to exert pressure on markets and make it a much more difficult kind of environment for investors.
All right. We're almost out of time, but just on the region, if you look at the zero COVID policy being employed by countries like China, could it then stand to benefit? We, of course, had data out today showing a significant slowdown when it came to services PMI. But what's your take on the strategy around zero COVID? Places like China probably going to be shut off for a while yet. Could that insulate the economic performance there?
Absolutely. So the longer that these Asian economies, particularly China, maintains their zero COVID policy, it means that essentially parts of the economy are not going to be functioning as normal. So that's kind of international tourism flows or even kind of manufacturing output, which could impact, as you mentioned, supply chains further. Every time there's an outbreak, certain counties or provinces or cities are going into lockdown. And that kind of stop-start approach is just very challenging for policymakers and for investors alike.